You're going to get some insight on how to create unprecedented revenues in your business. I am excited because my guest today is Susanne Mariga. She is a CPA, a certified public accountant, and fractional CFO specializing in high net worth strategies for 7 and 8 figure entrepreneurs using the Profit First system. She's going to share with us what that system is. She's the author of Profit First for Minority Business Enterprises. As a certified Profit First professional at the mastery level, she is passionate about helping entrepreneurs maximize their revenue, grow their business, and save dollars through sound tax strategies. I don't know about y'all, but I'm all ears. Susanne, welcome to Sisternomics. I'm excited to have you here today.
Monique, I'm excited to be here too with you. Thanks for having me.
As always, I like to start the conversation by asking my guests to tell me a little bit about the money story. How did you experience money when you were growing up?
So, that's a very good question. And I wish it was a question I thought more about more often because, I know we had a little conversation before we started recording about it, how much it influences our lives. And, my dad was an entrepreneur. My dad was an entrepreneur. He was actually a CPA. He had a CPA for almost 40 years. My mom was a stay-at-home mom and he was the breadwinner. So he literally got his clients, did his tax returns, and that's how he supported our family. And, I remember working for him. I was 14 years old when he hired me on my first job. He hired me as a bookkeeper. So I was like one of his bookkeepers for his firm. And I remember learning how to do bookkeeping, learning how to do some of the simple tax returns with him. And I remember when I went to college and I told him, I said, I'm going to major in accounting. He's like, what? Don't do that. Don't follow in my footsteps. Right. And I said, but dad is so easy. I'm like, I don't even have to study for this stuff and I get straight A's. And I remember graduating from college and everybody was like, learning how to read financials. And I'm like, you know, I was already an expert at this. So, entrepreneurs that are out there, definitely give your kids their first job. That's really important. But I think one of the things that I learned, from growing up in an environment where my dad was an entrepreneur was I kind of learned that if I wanted something, I had to work for it. I had to figure out how to make it on my own. I remember being around seventh grade, and you guys may remember it if you're in my generation, but there was something called a Snoopy snow cone machine. And I so wanted a Snoopy snow cone machine. And I remember like saving my lunch money up in order to buy this Snoopy snow cone machine because I really wanted it. And of course, later on getting a job. But I think I really learned about the things that I wanted in life. I had to learn to get it myself and figure out the how and how I was going to achieve that was probably one of the biggest lessons from growing up. Because as
Yeah.
growing up in an entrepreneur family, there wasn't a lot of money, right, floating around to just get you a Snoopy snow cone machine.
And you just triggered a memory for me. My mom was an entrepreneur. In fact, most of my aunts and uncles on my mom's side were entrepreneurs. And so I think that's where I kind of got it from too, Susanne. So I'm glad that you caused me to remember that, but there's another memory attached to that. Even though they were entrepreneurs, and I love the fact that they all had a lot of freedom in how they were able to move about in their day, never really stuck to a cubicle, if you will. But in addition to having that freedom, I also remember that many of the entrepreneurs in my family, they struggled to really create highly profitable businesses. They were able to live and survive, right? But they struggled to create highly profitable businesses. And so that's another reason why I'm glad that you're here today, because your book is all about creating that, making sure you focus on profit first. So can you break down what the profit first system is? And then we'll dive into some other ideas that you're going to talk about today.
Absolutely. So Profit First is a very unique system, and it was a system that was developed by an author by the name of Mike Michalowicz. And, I think a lot of times as entrepreneurs, we love what we do, right? It's our passion. And for me, it was accounting and tax, and I ended up starting my business about 16 years ago when I had my daughter. And I loved accounting and tax so much that, I would have done it for free. I just wanted to change the world of accounting and tax. I wanted to give an affordable solution to entrepreneurs that gave them the ability to understand their numbers and really get significant tax savings. And I think as entrepreneurs, we love what we do so much that most of us would do it for free, right? Whether you're a plumber, whether you're an artist, right? It's our calling in life. And unfortunately, when we focus on what we love, right, which is what the world tells us to do, focus on what you love, the profits will follow. What we find is a lot of times we get unintentional results, right? As a tax accountant, I remember clients coming to me at the beginning of the year, and I was always amazed by like, why are these people on pins and needles just to get their tax return, right? Like, why is it so stressful when they come in? And they were on pins and needles because they didn't know how much they owe. They really wanted to know, how much do they owe? And I would look at them like, you don't know. You don't know how much you made all year. Like, how did you make business decisions? And the reality is, when we don't have a framework to create intentional results, we get random results, which is why a lot of entrepreneurs live in what we call entrepreneurial poverty. In fact, they say that 80% of small businesses will fail within 5 years because it is so random, the results. And so what Profit First is it's a cash management system, not an accounting system, but it's a cash management system that's designed to create intentional profitability. And it's very similar to Dave Ramsey's envelope system, except for entrepreneurs, we don't want you guys keeping envelopes, right? That's dangerous. But what we do is we use bank accounts. And what happens in these bank accounts is, money is collected in one bank account all throughout the month. And then what happens is on the 10th and 25th of the month, so twice a month, money is allocated based upon their purpose. So money is allocated to a profit account, right? Because profit is intentional. It's a set percentage of your revenue, and that's the amount that's getting allocated to a profit bank account. So literally, you are profitable day one. Money gets allocated to an owner's pay account for your owner's salary, because a lot of times I ask entrepreneurs, who's your most valued player? Who is that staff member that they walked off your team today? You would be in pretty big trouble. And a lot of times they'll say, oh, it's Susie, oh, it's Mike, oh, it's Micah, but they'll never say it's themselves. But the reality is, the day that you walk off your business as a business owner, that business is significantly different if it can even continue. The
Mm.
next account that we're going to create is a tax account, because reality is, if you're successful and you're getting profit, you're making owners pay, well, there's going to be a tax obligation. No matter how great your tax accountant is, there's going to be a tax obligation. And we want to make sure that you're not figuring out, how am I going to pay for last year's taxes with this year's money? Instead, we're going to go ahead and fund that tax account based upon a percentage of revenue as we go along, so that when tax time comes, you're not on pins and needles when you visit your accountant's office. And that last bank account that we're going to create is called the operating expense account. And that account is really there for after we funded our profit, after we paid our owner's salary, after we've taken care of our tax obligation. This is all the money that's left for our operating expenses. And one of the things that I really love about this, Monique, is, we're working with our natural human tendencies. We're working with our natural psychology, meaning that, you know, as humans, the more there is of something, the more we use of it, right? We're efficient. It's something called Parkinson's law. If you take me to, a buffet and there's endless plates and endless options of food, I'm not gonna walk out proud of myself, most likely. But if you take me to a hors d'oeuvre dinner with a 5-inch plate, right, I'm gonna eat a whole lot different. I'm gonna still be satisfied, I'm gonna still be full, but I'm gonna make a lot different choices because my plate size was different and my choices were different. And that's the same way it is with business. The more money we have, when cash is flowing, when all the money is put in one bank account, we suddenly feel invincible. Like, maybe I can afford that new office space. Maybe I can get computers upgraded for the team. How am I going to reduce my taxes for the year? Maybe I can buy some things that I don't really need to reduce taxes at the end of the year. But instead, when I'm working with a very limited budget, when I see this operating expense account and that's all that I have, I'm going to make very different decisions based upon scarcity, right? I'm creating this illusion of scarcity, meaning that I am limiting what I can use for my operating expenses and what I can purchase.
Mhm. You just set me free. Like, I feel like we can end the conversation right here for me personally. Can you talk about how those people that you've worked with that have implemented just that one strategy alone, because you got more to share with us. Do you have any case studies that come to mind? You don't have to give specifics of a company or an entrepreneur that implemented just that one strategy. that experience of substantial a change in their business from one year to
Monique,
the next?
I have a whole book on it. I have a whole book on it, Profit First for Minority Business Enterprises of case studies. When I wrote my book, it was very tempting to talk about statistics. And I said, you know what? We're not going to talk about statistics. We're going to talk about the success stories. We're going to talk about the outliers. We're going to talk about 7, 8 figure businesses that created the outcomes that they wanted, and particularly using the profit first method. And, we've had clients that went out and bought farms. We have clients that went out and bought their building. We have clients that became the first millionaires in their family. And again, it's because they're creating intentional bottom lines through their actions.
So, talk about how the top 1% maximize their profits, if it's anything beyond what you just said. Because again, I can see how that alone can set a bunch of people free. Is there anything else that you would add to how that top 1% maximizes their profits?
Definitely. So the first thing, as I mentioned before, it's being intentional about the results, right? Because when we perform random actions, we get random results. When you have very intentional actions that are designed to create very specific results, we get very intentional outcomes, right? Which is hence profit first. We're really determining our profit up front. We're creating physical movement of money to create that. The next step is a lot of times, with our clients, I specialize in high net worth taxation. I'm a fractional CFO, and a lot of my clients are easily in that 7, 8 figure range. And, it's interesting because, once they're on profit first, once they're creating that intentional outcome, right? It's not uncommon to have them in a situation where 50% of their revenue is owner's benefit, meaning that 50% of their revenue is going towards profit, it's going towards owner's pay, it's going to tax. And so if you're $1 million company, you're talking about a $500,000 adjusted gross income on that 1040, that tax return, right? And so one of the things that we're going to look at is, a lot of times when you go to your accountant, they tell you, all right, Monique, you need to go out and buy this truck, right? And this truck, you're going to get Section 179 and it's going to be a gas guzzler, but that's okay because you're going to write this off. As a profit first accountant, I will never tell you that. That is sacrilege on profit first. Unless you need a truck, right? Because you're in construction or you're in landscaping, I will never tell you to go get a truck. And I've seen accountants tell their doctor's office clients to go and get a truck. And I'm like, why are you telling her to get a truck? She doesn't need a truck. But instead, what we're going to do is we're going to look at your goals. We're going to say, okay, what are your goals? And if you're anything like me or my clients' goals, or one of their clients is they want to retire one day, right? And they want to retire and they don't want to have to worry about how they're going to live in retirement. And so they want to start building that nest egg and they want to build it aggressively. And so what I'll say is, okay, so how do we get a tax deduction while still setting you up for that retirement? And if they're a closely held company, let's say they're a husband and wife, maybe some family member companies, right? Maybe something like solo 401k plan or Keogh plan might be a great thing for them because now they can put away about $66,000 a year in this solo 401k retirement account, right? And if they hire their spouse, they can double that. Now we're talking about putting away about $130,000. Now, here's the key, Monique. Did I just increase expenses on this?
Mm,
I did not increase
no,
expenses at all,
not at all.
right?
Right.
Instead, what I did is I just passed money from my left hand to my right hand, and I just got you a $130,000 tax deduction.
Girl,
And if
love it.
you're in a 37% tax bracket,
Right.
I just saved you about $50,000 in taxes.
Oh my goodness. Wow.
If you have employees, right? One of the goals of a scaling entrepreneur is I want to keep my people longer. And I
Right.
want to keep my people longer because the longer they're doing their job, the better they're going to get at this job, right?
Right.
And the better they get in their job, the more our profits are going to go up because they're going to find more efficient ways to get things done. They're going to get things done faster. They're going to get more innovative, right? They're going to service more clients better. And so I'm going to become more profitable. And so one of the things that I want to do is I want to incentivize this person to stay. And I don't
Mhm.
want to just do this through bonuses and things like that. I want to create, maybe what that means for me is I'm going to create a retirement plan. And I'm going to say you can participate in my retirement plan, but for you to fully invest in this retirement plan, you need to be with me for 6 years. We're not going to do a safe harbor plan. You got to be with me for 6 years before you fully invest. And so that means every year I'm going to get a tax write off because I'm going to contribute to your plan.
Mhm.
However, if you leave me for the shining lights of a competitor, you're going to forfeit those contributions that you're not vested in.
Oof.
And what that means is that money stays in my trust, right? And if it stays in my trust, that means it's gonna go to the person that's standing last, and that just happens to be me. So I win both ways. I win if you stay with me because you got better at your job, my profits went up, and I win if you leave because I just contributed to my retirement account.
Is it ever too late to implement some of these ideas, even for that business that's been in business for, say, 5, 10, 15 years? They've been doing okay, but they hit that plateau. Is it ever too late to begin to implement some of these strategies?
Now, Monique, the best time to implement a strategy was 10 years ago, but the next best time is today. So it's never too late to implement the strategies, right? You can start profit first today. Just go ahead and open those bank accounts, right? And maybe just start with 1%. And if you're already at 1%, move up to 2%. On my site, I can give you a gift that you can give to your audience. It's www.profitmap.co. What I have there is I have the percentages that a healthy company has in terms of profit, in terms of owner's pay, in terms of operating expenses and tax. And it's different for every stage of business. So if you're under that six-figure mark, there are percentages that you can benchmark yourself against. If you're a $10 million company, you can benchmark yourself against those percentages. And it's a free resource. You're absolutely welcome to download it and just start with, you don't have to be at those percentages. Start with where you're at today. Just do 1%, and next quarter, just increase it to 2, and just every quarter, just keep increasing it. In terms of tax strategy, it's never too late to start putting away money for your retirement account. And in fact, even if you're putting away $25 a month, that $25 compounds. The worst thing that you can do is keep putting it off. So definitely start today. Don't delay these things, right? Because it just really, you lose out those opportunity costs. You lose out on those opportunities to compound and grow your wealth.
We're talking with Susanne Mariga. She's a CPA. She's the author of the Amazon bestseller, Profit First. Go grab it, y'all. There's another thing that you say that I really love, that I think it's important to drive home. And this is a perfect space to add it into the conversation. You have a quote that says, "Stop pricing yourself as average unless average you are." Kind of your Yoda quote there. I love that. Pricing is important. Can you talk a little bit more about that, Susanne?
Pricing is so important, and especially in the profit first strategy, because and it's a psychology all in itself, right? With pricing, but it's a lot easier to get where you're going when you have the right margins. And when I say margins, that's your price that you're selling it at, less the cost to actually produce that service or that good that you're selling. So it's that spread, right? Is your margin. And pricing is a lot to do with creating the margins that's going to allow you to be comfortable, right? For example, if I have 60% margin compared to 20% margin, I'm going to feel more comfortable, right, in my profit first percentages, right? And it's going to be easier for me to get to those personal goals. And I think a lot of times one of the biggest mistakes that entrepreneurs make, and I made this too starting out in my entrepreneurship career, is we literally call our competitors. We go, "Hey, what are you charging? If I'm a customer, what would you charge me to do the same thing?" And we price shop, and we look at, what is an acceptable price that we won't get pushback on. And that's how we start to value ourselves. But the problem with that is when we choose to value ourselves against our competitor and we're using that as the benchmark, the problem with that is we're saying that we're average, right? We're average. And I'll tell you this, when I want a particular result, I'm not looking for average, especially when I'm looking for something that's very important to me, something that I want to change my life significantly. I'm not looking to pay average, right? I'm looking for someone that's good. When I'm looking to find the surgeon that's going to fix my problem, I want the best surgeon. And if you got in this business because this is the gift that you were meant to share with the world, right? You do yourself a disservice when you're pricing yourself as average, because reality is, nobody's going to work for free, meaning that you're not going to be able to hire the A player employee that's going to best represent you if you're charging average pricing, right? Because average, what, 80% goes out of business in 5 years, right? We want to talk about average. In order to hire the best and brightest, you got to be able to price beyond, because the best and brightest is not going to work for average salary.
Mic drop. Another mic drop. I love it. So the pricing strategy is key. Like I said before, Suzanne, when Beyonce launched her Renaissance concert earlier this year, she didn't have no qualms about charging ticket prices starting at $1,000 in some places, right? Everybody made a fuss about it. But because she understood her value and what she brings as an expert, the top entertainer in the world, why would she charge $250? Like, it doesn't make any sense. So understanding your value, I mean, it's hard to determine your worth because as a human being, your worth is indeterminable. I mean, we're all worthy, but knowing the value that you bring through your experience, your expertise, your skill set, the amount that you have invested in your own personal and professional development, being able to put a dollar amount to that helps you to decide, especially if you're a one person business or solopreneur. That is so key. So I'm glad that you said that. And I just thought I would add that to the conversation for people to really consider that
Exactly.
it's worth it for us not to have guilt or shame around charging what we should be charging. And that can be some of the work that we do as we go into this space of reflection at the end of the year so that you can come into the upcoming year, bam, with those prices where they should be.
I love it. I love it. And it's so true. I mean, I love the quote, the Yoda quote too, about like just like she mentioned, don't price average unless average you are. And I'm gonna even put out this, if average you are probably in the wrong line of work. You need to be in a line of work where you are excellent, right? Where you are leading, where you've got the competitive edge. And so let's not hang out in this average space because honestly, when you price average, when you're basing your value based upon price, the winner at the end of the day is free, right? It's who can get the lowest price. And I don't think any of us want to be in that race towards free.
Excellent point. Great advice. Is there anything else, Susanne, before we wrap up today that you want to make sure you share with the audience that we haven't discussed so far?
I would say go back and always understand your why. Understand what does winning look like for me at the end of the day, 5 years, 10 years, 20 years. Well, what does winning really look like? And then create that outcome by working backwards. Algebraically create that cash management system, create that trail to get you to the outcome that you're seeking.
Excellent advice. Excellent insights. Thank you so much. I cannot wait to get my hands on Profit First. Like literally, usually, I have to admit, usually whenever I have an author on with me, I get the book, read it in its entirety first. But in this case, I didn't. But that is an excellent excuse for me to have you back sometime in, maybe late first quarter, early second quarter of 2024, Susanne, if you would be willing to come back and visit with us.
I would love to.
And we can have a follow-up to this conversation. But I really, really appreciate you coming on with us. Let me go ahead and put this website up again for people who may want to take advantage of the free offer that you mentioned. You can go to www.profitmap.co, profitmap.co, and Susanne has something there for those of you who are ready to get to that next level, who are ready to rewrite the money story so that you can experience unprecedented profits in your business in the upcoming year, no matter what the economy is doing. And again, grab the book. It's at Amazon. But if you can't support a small independent, is it at small independent bookstores, Susanne, or is it
It
just
is anywhere that books are sold.
excellent? Excellent. So go ahead and grab that. Susanne, thank you so much for being a guest on Sisternomics. I really appreciate it.
Thank you, Monique. It's been fun.
Listen, you guys, that's it for today's episode of Sisternomics. All the links that we have mentioned in the program today are going to be in the description box. Make sure you get Profit First. If maybe you're not an entrepreneur, but you know one, grab Suzanne's book and use it as a gift to help those entrepreneurs that get to their next level. I got a couple people in mind myself that may get a copy of Profit First. But that's it for today. If you like today's episode, please give us a 5-star rating on Apple Podcasts. You have no idea how far that goes in helping us get this podcast to the next level. And I also need to let you know that Sisternomics is produced and distributed by Overflow Enterprises, a Black-owned, woman-owned company. I'm very proud to say that. Listen, my name is Monique Caradine-Kitchens. Remember, I am your sister on your money journey. So please do share, again, like and subscribe to the podcast. And I look forward to seeing you next time on Sisternomics. Take care.